Hello there and welcome to NCBA Money Mastery Series Season 4, where we teach you how to make your money work for you. My name is Evelyne Musyoka, and on this show we are excited about numbers because at NCBA, the numbers that matter to you matter to us. Here's some numbers that matter regarding credit scoring. 65% of all loan accounts at CRB are mobile loans. 10 million is the number of unique mobile loan borrowers in Kenya, and 3 years is the maximum tenure for the unsecured loop loan. Now, you probably know somebody who uses their credit score to consistently acquire a facility from a lending institution. So how do they do that? On today's show, we host Dancan Odhiambo, who is the lead data scientist at NCBA. He'll be giving us a lot of information on what credit scoring is and what's important to you. Dancan, welcome to the show.
Thanks for having me, Evelyne.
Thank you. So right off the bat, what is a credit score and how can I get one?
Okay, so a credit score is a numerical representation of a customer's ability to service a loan. Credit worthiness. What the code tells us, if customer A is able to service a loan, or customer B is not able to service a loan. I'll give a brief history on the credit score. So two friends at Stanford Research Institute, that was William Fair and Hal Isaac. They formed a company called FICO. FICO means Fair Isaac Corporation. So these guys had the idea that a lender's risk can be represented by a single value, or rather a single digit. So in 1989, I think in 1989, they debuted the famous FICO score, which is used, I think, across America and other regions as well.
All right, quite a story there, Dancan. You mentioned credit worthiness. Is it a negative score or a positive score?
Yeah, that's a fantastic question. Yeah? Basically, a score is just a detailed picture of where a customer is in their financial journey. We have different types of scores, and you can summarize them as ABCDs of scoring. The first one, A, stands for application scoring. Application scoring basically tells us the likelihood that a new customer is likely to default on a credit obligation or not. The B stands for behavioral scoring. Once the customer is onboarded lender's platform, it utilizes different products. The different products ranges from savings and even loans. So basically we use the interaction between the customer and the lender's products to come up with a behavioral score. The C stands for collection score. A collection score is used when a customer is in collection, and it tells us the likelihood that we are able to collect from a customer. And then finally we have the D, which stands for the desertion score. Basically, the desertion score tells us if a customer will be able to take another loan once he offsets the loans that he currently has.
All right. So for the credit score, how does it look like? Is it an alphabet? Is it a numeric? How does it look like?
Yeah, you can represent it in both ways. I mean, you can represent it as an alphabet. You can also represent it as a number. I'll give an example. It can range from 1 to 1,000, but it varies across different lenders. With 1,000 being your highest score, meaning you're the good customer or the less risk customer, and the lowest score meaning you are a high risk customer.
All right. So for someone who wants to invest, what are the advantages of having a credit score?
Yeah, I think I can expand that more. I think credit scoring has advantages both to the lender and to the customer. I'll start with the lender. For the lender, the advantages are we save on time. It improves the loan officer's efficiency, so we are saving on time. The second one is consistency. As you know, there's the concept of human bias when you're making decisions. So with the credit scoring, the human bias is eliminated largely. There is also, the company is also able to vary different credit policy according to different risk classifications of different customers. But for the customer, even the advantages are better. Let's say, I'll give an example in this case. Let's say we have Stephanie and Eric. And Stephanie has a score of 1,000. Eric has a score of 200. In this case, Stephanie is the less risk customer and Eric is the high risk customer. So when a bank is looking at when the bank is evaluating the different customers, they'll be evaluated differently on different aspects. The bank will offer favorable terms to the less risk customer than the high risk customer, because the bank has to price for tenure risk. The bank has to include the risk premium when they are doing their pricing. So I think some of the advantages that comes to the guy who is less risk are they are offered more or longer tenure. They are offered favorable pricing, and also they are offered maybe bigger credit limits than the one who are high risk. Another one that I can think of is the bank is more likely to extend to you more products when you are less risk.
All right. We see a lot of banks using emerging technologies in their operations. This is really the nexus of banking and tech, right?
Yeah, I mean, technological advances have really given lending institutions unparalleled capacity in reducing risk. Right now, we are able to see banks use statistical and machine learning methods to distill huge and large data sets to a single, maybe a credit score, to a single point that is a credit score. In other words, credit scoring is a form of artificial intelligence which uses predictive modeling.
A big term there, artificial intelligence. For our viewers, what does that mean really?
Yeah, that's the ability to make systems or machines act as humans.
Oh, all right, all right. So still on the technology front, we see digital loans and banks actually taking strategies to offer more of these loans. Why is this the case?
Yeah, I mean, by nature, digital loans are very, very convenient, and they're very convenient because they are easy to use. The application process is very simple, and by nature, they are emergency. Yeah? Now, due to those factors, we have seen very, very many consumers adopt digital technologies. I mean, you gave a very interesting figure. 65% of the loans at CIS are mobile loans. You've not even added other categories which fall within digital loans. Yeah, so not be left behind. So banks move forward and try to keep up. Be more always want to listen to the consumer, and the strategy will always react to what the consumer is doing or what the consumer wants.
All right. You've mentioned that credit scoring is data-based. I'm curious, do all the banks use the same approach to get the credit scores? And taking in mind that a lot of credit reference bureaus have the same data shared by the different lenders.
I mean, different lending institutions have very, very different risk appetites. You can use different approaches when you are determining the credit score, and it varies across the lending institution based on their risk appetite. So I think the first one that you can use is a statistical approach, making decisions based on data, full stop. You can use approach, we are applying experience and knowledge of the institution when making this decision. And then there is the hybrid approach, which considers both statistical and judgmental. Basically, you layer the judgmental on top of what statistical decision has been made.
All right. So statistical, judgmental, and the hybrid. How does that relate with the peers, Kenya's peers across the continent? Yeah,
I mean, in terms of credit scoring, Kenya has done really well. Even in terms of adopting new technologies that are emerging, Kenya has done really well. I think we are leading in sub-Saharan Africa, but there is opportunity to improve. I think we can improve on our quality of data. If you look at countries like South Africa, they're really doing well in trying to improve on their qualities of data. Also, I think Kenya can do well when it comes to improving maybe certain systems or certain processes.
All right, Dancan. Thank you. On that note, we'll take a quick break, and when we come, we're looking at how to improve your credit score. But before we do that, in case you have any questions or comments, feel free to share them. Dancan and I will be glad to sample them when we come back. Don't go too far.
Candace, what's that?
I brought you a small bonus.
Bonus for what?
Daddy said you helped us get a house, a car, and Mommy's business.
But I only helped them get the loans.
You did more than that. You got us 299 family dinners, 64 kisses on the cheek, 12 road trips to see Grandma, 42 jokes from Daddy, 49 laughs from Mommy.
In over 60 years of dealing with numbers, we've learned that the numbers that matter the most to you are the ones that matter the most to us. NCBA Bank. Go for it.
Welcome back to NCBA Money Mastery series from the bank that says go for Odhiambo, the lead data scientist at NCBA, as we expound on the conversation of credit score. Dancan, how can one improve their credit score?
Yeah, I mean, there are many ways you can improve your credit score. I think one of them is to invest more, especially for the new applicants who have never used credit facilities before. I think different institutions offer different products. We have direct savings. We have fixed deposits, we have term deposits, and we also another one to look at is your payment history. As you are aware, banks also offer different credit facilities. So your payment history on these facilities, so your uptake on these facilities need to be good for your credit. Number three, I think longer your credit score, the better. So you need history. And also you need to use the credit facilities that have been advanced to you by these lending institutions.
Earlier in the show, we talked about behavioral scoring.
First, you need to ask yourself, is it a home improvement loan? What am I doing with this loan? Is it an emergency loan? And the loan, you need to have a plan, or you need to be in a position where you can service that loan. If you are not in a position where you can service that loan, then you need to have a clear plan to get yourself to that position. Also the uptake. Remember when you are doing the uptake of different banking products, and this uptake of different banking products then feed into your behavioral score. So I think in general, your utilization and maybe your repayments of different facilities need to be good.
All right, a lot of information there. I'd like us to loop in our viewers in the conversation. So let's take a few moments to respond to questions and comments that are coming in. We have a question from Rico. Hi Rico, thank you for joining us. He says he recently lost and he'd like to know if there's any advice we can give him regarding to how he can pay his digital loan, given that he'll not be having an income for a while. And he'd also like to know how his credit score will be affected.
Yeah, I mean, life happens. A lot of things can happen. The only thing that is constant, I think, in life is only change. As you can see in 2020, no one expected it, but COVID happened. Many guys lost their jobs. That was quite unfortunate. As a lending institution, the lending institution is interested in walking the journey with the customer. Not only lending and making profit, but walking the journey with the customer. So I think if the guy lost his job, Rico, basically can reach out to the lender to try and work out different credit restructuring mechanism. We have, I think, different options when it comes to credit restructuring. The first one is a moratorium. Sorry. Okay, the first one is that one. I think that one is where you can agree with the lending institution that, okay, right now I'm very bad, things are looking bad from my side, I need maybe 2 more periodic installment, and then you can reach an agreement on how you can do that together with the bank. I think the second one is a restructure, a complete restructure, and restructure can happen in 2 ways. They are related. One, the tenure of your loan can be increased, and 2, maybe the periodic installments that you pay can be reduced so that you can be able to service the debt in a comfortable manner.
Good options there. Our second question comes from Joanna. Joanna, thank you for joining us. Joanna wants to know what data points are considered during scoring.
Yeah, so we consider many data points. I think they can vary depending on whether you are a new or an existing customer with the lending institution. Some of the data points that we consider are your investments. What's your portfolio of investments, and how have you invested? What's the value of your investments? The second one you look at is obviously the payment history. So the payment history, as I said earlier, the bank offers to you different credit facilities. Yeah. So for the different credit facilities, how have you paid them? What's your utilization of them? And what are you doing with them? Also, we look at the length of your credit history. The longer your credit history, the better. And so that's a data point that we also use. And also you need to use the available, as I've said earlier, you need to use the available credit that has been extended to you by the lender.
All right. Picking up from Joanna's question, say I want to borrow a loan for my business. And you need to do the data scoring. Will it be done based on myself as a director of the company, or will the company scoring be done separately entirely?
Okay. I think businesses are different. The structure of businesses are very different. We have sole proprietorship, we have LLPs, we have corporations. Yeah. So the structure of businesses are different. However, we also score the business because we use different data points when you're looking at a business and when you're looking at an individual. What I think one of the considerations that we will make when scoring the business is its composition. By composition, I mean its management, or by extension, its board of directors. So yes, we will score the business separately, but we will also look at the composition of that business.
Right. Sharon asks how she can get her credit score.
Okay, a credit score you can get it from the CRB. There are 2 credit scores, yeah? Lending institution credit score, and then there is the CRB credit score. You can get the CRB credit score directly from the CRB. They lend it once you maybe call the contact center of the lender to know maybe what your credit score is.
All right. Another one of our viewers also asks how they can turn their negative credit score into a positive score.
Yeah. By negative listing, does not only mean that you've defaulted on a loan. You can also be negatively listed in case of bounced check or failure to honor an obligation of, let's say, a contract. A contract that has been signed by the 2 parties. Yes, you can be negative. There is always a road to redemption. The road to redemption basically involves you going to the lender. I need to pay back maybe what I'm owing. Once you pay back, we'll go to be initiated. Which after that you'll be able to Once you do that, that I'm rehabilitated, willing to walk the journey, willing to grow with you. So I think that's how you can turn it around from a negative to a positive.
So there is hope, yeah?
There is hope.
Definitely. So another one of our viewers is asking if they can use a good credit score as a collateral for borrowing.
Yeah, that's a, let's say when a lending institution, a bank, extend to you an unsecured facility. By extension, it basically means they are using your data as collateral. So yes, data can be used as collateral, and that's what happens when a lending institution extends to you maybe an unsecured facility. Yeah.
All right. Indeed, a lot of information that we can use to make the best use of our credit score, certainly. Thank you for joining us on the show and for the wealth of information. Ladies and gentlemen, that's all the time we had for you on this episode of Money Mastery Conversations, where we teach you how to make your money work for you. Visit our website at ke.ncbagroup.com. You can call the numbers on your screen right now, and better yet, you can like, share those on our screens right now. And next time when we'll come back with a different set of numbers that matter, I've been your host, Evelyne Musyoka. Goodbye and take care.